Tesla absolutely crushed its latest earnings call, which was one of the best quarters of Tesla in recent history. Every bear thesis that was still out there disappeared because of what was said in the earnings call. Finally, Tesla was elaborating on goals and objectives for the next years. Let's talk about the bigger picture. Welcome to my channel, where I give you the latest Tesla news.
Some of your thoughts on the stock moves, which have been monstrous this week, can it continue to move higher?
It's just starting, because what I view is they needed to ultimately show that margin story, that it was going to rebound, and we saw just massive margin rebound in terms of for Tesla, and it's all about deliveries into next year. 20 to 30% growth, much higher than anyone expected, even the bulls like us. I think it's get the popcorn out. This is just the stage to this company being over $1 trillion market cap.
I mean, someone, when I was asking about the competitive landscape, said there is a monstrous difference between Tesla and Lucid and Rivian. Would you say that's right? I mean, not even in the same sentence?
We're talking Mahomes compared to other quarterbacks, right? I mean, this is just a separation from a scale and scope. They're going to have 2 million deliveries next year. I mean, a lot of these other, you're talking about 100, 200K. What Tesla's able to do right now it's expanding that product line. You'll see Semi, you'll see Roadster, of course, Cybertruck's out there. Sub $30,000 vehicle, we think, going into next year. That's ultimately going to be the key as this all ultimately plays out. And look, you go into this, me and you have talked about this the last few weeks. New York City cab drivers barraging Tesla into this quarter. They showed the margins, they showed the delivery, and I do believe the RoboTaxi takeaways was the wrong one that the bears came away with. This will be an autonomous and AI story over the coming years.
Kathy Wood over at ARK Invest sold 77,000 shares. The closing price was $260.48, valued at over $20 million. Mistake taking some profits now? I mean, how quickly does this stock grow? Was that not a good move on her part?
Look, Kathy and ARK, one of the biggest supporters of Tesla, right? So, they'll, for the long term, if you look at their model on robotaxis and where this is all heading, it just speaks to our broader point. This is the most undervalued AI play in the market. And I think what we saw with this quarter was a huge step in the right direction because of margins. Because we can talk about AI, autonomous all day long. Comes down to margins. You couldn't see those team margins. So the 200 pip improvement, now going to 20% next year. But look, 20 to 30% delivery growth. If they even hit the bottom end of that range, then this is a stock with a 3 in front of it.
One of the biggest growth engines for Tesla is going to be the Cybercab. So one of the biggest issues investors and analysts had with Tesla was that during Tesla's We Robot event, Musk didn't talk about timelines and everything was kind of up in the air, so no specifics. However, now Elon said something incredible and was much better than most had expected, that Tesla would hit volume production of the Cybercab by 2026. Now, that's incredible. We're not talking about beginning of production. We're talking about volume production by 2026. That is insane because this could mean that Tesla is much further ahead than most have thought. Elon was also talking about the 20 to 30% increase in volume as far as sales next year. Musk basically says that this is going to happen, for one, because we're going to introduce the cheaper options, and number two, because FSD is going to ramp up. It was the future and guidance, but also the actual numbers. We saw earnings per share beat estimates by 25%. The energy sector grew 50% again to $2.4 billion. Automotive service out of warranty is up 30%. Of course, 8% growth wasn't impressive, especially if you're looking at Tesla as a growth company. But I think this is a temporary issue. once the next growth phase of Tesla will start, this 8% will grow to 20 and 30%, Elon said. And the market is reaching to it by increasing the stock price by 12%. Everyone is focused on what is coming next. The Cybertruck also is selling much better than most have thought. The top 3 EVs in America right now are the Model 3, the Model Y, and the Cybertruck. And if you look at it at net income of Tesla, 2.5 billion per quarter is absolutely insane. Operating margins went up from 6% to 10%, which is absolutely incredible. Energy deployment up 75%. That 50% growth is just the beginning. 34 billion in cash without debt. And for Tesla, which manufactures vehicles, being cash heavy is amazing. It seems as Tesla is much further ahead than even some bulls thought. We are not yet in the beginning of Tesla's next growth cycle. Imagine what Tesla will look like when these growth engines will be deployed. FSD licensing right now is testing. Imagine what will happen once it'll be released and the existing fleet will be available to be deployed to ride-sharing services. Tesla is making it easy for auto manufacturers to add FSD to any EV being produced, which will be much easier, faster, and more cost-efficient than producing their own. Self-driving will add amazing growth to Tesla. Energy is already growing at an insane pace. The Optimus is being perfected as we speak and released in the near future. Tesla has improved over these last years. Auto sales are cyclical and are also dependent on the economy. So since Tesla's IPO, it rewarded its investors 14,000%. Tesla has 95 billion in sales with only $10 billion of operating expenses. This is absolutely mind-blowing. Tesla has a bright future ahead. Tesla doesn't need a low-end vehicle to continue to grow, said Oppenheimer Colin Rush. Colin Rush, Oppenheimer's senior research analyst, recently discussed Tesla's quarterly results and post-earnings surge. What's next for the EV maker? Tesla's autonomous driving ambitions from China and more.
Yeah, there's a couple of things. One, the gross margins on the auto side were better than expected. And it's pretty clear that the company is self-sustaining from a cash flow perspective. And as they continue to grow as an EV maker, and we continue to be very bullish about their EV technology, it extends the runway on their ability to deliver on the autonomy opportunity. And while we have some caution around that autonomous technology, I think folks started giving them a lot more credit for that runway and their ability to deliver on that promise.
Colin, if you were just looking at the prospects for selling cars, selling Teslas around the world for premium prices, I mean, that part of it is it? Would that cause you to buy the stock here? I mean, and even some of the profit being so profitable, but a lot of it had to do with that pure profit the company gets from selling those environmental credits to other automakers.
I mean, when we look at it, it was, about a little less than $800 million in credit revenue that they had in the quarter. And so there's a meaningful contribution to their net income from those credits. And that comes from multiple geographies. But at the end of the day, we look at least half, if not more, of the value being ascribed to their AI opportunity, and particularly autonomy as the first application within that AI bucket. And so for us, the EV opportunity is meaningful. They're executing on it well. They continue to drive costs lower and have great products. But the AI, bucket of profit pool that they're trying to dip into here is really what's driving the value in the stock. And we think they're further off from actually being able to deliver on that than what the stock is saying at this point.
What would that entail? How much would be the car business to get to anywhere? Let's say a multiple of what the market cap is right now. How much of that will still be electric cars, and how much of it is going to be everything else that gets under the Tesla umbrella?
We're really looking at the potential for them to grow into, $5 to $6 of earnings by 2027, 2028. And so if you put a multiple on that in the high teens, you can get yourself into the $100, maybe $120 range for the stock. We're looking at the energy storage business at worth $20 to $30, and then the balance of the stock price here is really being driven by the AI potential. And they certainly have a very capable engineering team that's working on these opportunities, but it really comes down to when and what the competitive environment looks like. And right now, from a regulatory perspective, they're certainly behind. From a cars on the road perspective, they have more vehicles on the road, but not vehicles that are actually, driving themselves. And so the testing process is going to take a fair amount of time before they can actually start monetizing that in a real way. At this point, you look back at history and look at what happened with Japanese automakers, Korean automakers. You really end up having to make vehicles locally in domestic markets. And so the question is, what's the technology underlying that? And we're seeing the OEMs in both Europe and the U.S. make significant investments on driving cost reduction. In the U.S., I think it's going to be hard, in this political environment to really see, Chinese automakers start to penetrate this market in a timely fashion that would start to take share from some of the existing manufacturers that are already here.
Hey, if you like this kind of content, please like, subscribe, and turn on notifications so you won't miss any updates. Thank you. AI route. A big reason Tesla stock jumped after reporting third quarter earnings can be summed up in one word: growth. Now, Tesla's stock chart is looking much better, leading traders to look for an all-important breakout. For the third quarter, Tesla reported better than expected profit margins, while management said it expected to grow EV vehicles deliveries in 2024 from 2023. That implies about 515,000 deliveries in the fourth quarter, a record, and about 25,000 better than Wall Street was projecting, according to FactSet. It is a big number for the final quarter of the year. One thing Tesla will use to achieve the record is deals for car buyers. Canaccord US market strategist Michael Welch noted that Tesla shares closed above resistance on Friday. Getting through resistance, which is often called a breakout, means investors are holding on for higher prices down the road. The average analyst has increased price targets for Tesla about $10 per share. ARK Invest Management said on Monday that Tesla driverless ride-hailing plans could unlock $11 trillion in revenue potential, exceeding the total addressable market Uber and Lyft are targeted today. So this is what happened. In our view, Tesla could enjoy a price umbrella at its RoboTaxi launch thanks to the high level of current ride-hail prices while leveraging a lower cost per mile than the average vehicle on the road, ARK Invest analyst wrote on their newsletter. This is why this matters. During Tesla's third quarter earnings call earlier this month, CEO Elon Musk said the company expects to start ride-hailing services in Texas and California starting next year, subject to regulatory approval. However, the vehicle may not all operate as driverless robotaxis, but with a driver as some states demanded until the company touches a certain milestone in terms of miles and hours driven, the company said then. Of course, there was a ton of XAI news, and we'll talk about it in this next video. So I'll see you in this video. Goodbye.